The US dollar is growing as investors are worried about high inflation in the US. The US CPIs will be released next week and could affect the outlook for Fed's interest rates. After all, another strong value of the core consumer price index in the United States can maintain the Fed's interest rates at elevated levels for a long time. However, today the latest statistics did not play in favor of the greenback. And today the Bank of England made its decision on the policy rate. It was left at 5.25% with the two votes in favor of a rate cut by 0.25. So despite maintaining the previous settings, the decision looks dovish. That's the pound sterling, which accounts for almost 12% of the US dollar basket, weakened and thereby reinforced the greenback. However, the big question is whether the price of the British pound should be closer to the dollar and the Fed Reserve cycle, or nevertheless to the policy of the ECB and the euro. High-impact reports on the world's second-largest economy were released today. China's exports grew much less than imports. Exports added 1.5% compared with the expectations of a 1% rise. Besides, imports expanded by 8.4%, much stronger than the estimated growth of a 5.4%. China's trade surplus fell to $72.35 billion in April. However, the term surplus means that China is selling more goods than it's buying. And this indicator in general is a positive for a country's state of affairs. It's also bullish for liquid analogies of the yuan, the currencies of Australia and the New Zealand against the greenback. As for the warnings from the US Central Bank, more aggressive comments from its policymakers have already partly strengthened the US dollar. For example, Boston Fed Reserve Bank President Susan Collins said on Wednesday that a sufficiently long period is needed for the US economy to reach the regulator's target of 2%. Although the likelihood of a rate hike in the United States is minor, it cannot be completely ruled out. But so far, fresh reports suggest that monetary easing in the United States is around the corner. For example, initially unemployment claims published today rose to 231,000 last week. This figure is the highest since August 2023 and far exceeded forecasts of 210,000 people. The weekly update points to some softness in the US labor market and provides another argument in favor of rate cuts. That's why the US dollar index, which measures its price against a basket of currencies, including the yen and the euro, initially climbed above 105.70 today and even repeated its previous weekly high. However, a weekly update on unemployment claims, as we indicated in our traders calendar, spoiled the whole picture and pushed the US dollar index sharply down to 105.5 points. The euro-dollar pair was preparing for defeat today for two reasons at once. Because of the hawkish sentiment about monetary policy in the United States and the dovish sentiment of the European Central Bank. Therefore, the euro is trading around 1.0750 with the risks of extending its losses for the third session in a row. But the unemployment claims in the United States interfered and sharply pushed the European currency above 1.0770. In the short term, we can expect the bullish trend to continue, and the expected intraday corridor is assumed to be between support at 1.0725 and resistance at 1.0800. US stocks reacted to the changes in the same way. The S&P 500 index, after a lackluster session the day before, continued to decline until news of a weak US labor market gave it bullish momentum. As a result, the index began to trade higher in the range between 5,180 and 5,198. until the next series of reports is released in the United States on May 10, the situation is likely to continue. It goes without saying that the weakness of the US dollar also benefited oil prices, and Brent futures today have already risen to $84 per barrel, and this impetus was provided by data on the US crude oil inventories. As official data showed the decline in inventories, this signaled a reduction in supplies as well. At the same time, the outlook for energy demand, on the contrary, has improved due to the expectations of a monetary easing by the Federal Reserve. At the same time, oil prices remained close to the 2 month lows as the geopolitical tensions in the Middle East calmed down. So the prospects for production from the OPEC and its allies also remain extremely uncertain. The cartel's meeting will take place on the 1st of June, so the Brent price today could not decide whether to fall or rise. The result was strong volatility and the wide price range between 83.5 and 84 and 30 dollars per barrel. You have watched the market review by InstaForex analyst for Thursday, May 9. Subscribe to InstaForex TV channel and we keep you updated on all market developments. Feel free to ask any questions and leave your comments down below. See you online tomorrow.